Vincenzo's Gold Crypto Investing, a quick coin update because that's what you guys all care about, the coins, right? You guys only care about the coins and none of the nonsense. We're going to talk about Doge since we ain't talked about Doge in a minute. The Dogecoin, the fucking Dogecoin, right? I am the Dogecoin champion, right? Called the Elon Musk. And the Jeff Bezos move phenomenally, right? So we're going to go here to our volume indicator. We're going to go from the beginning of the fucking Doge. Everyone in the Doge. I miss those days where everyone cared about the Dogecoin, right? No one gives a flying fuck about the Doge anymore. You can see all of the major volume is way down here at 0.05 cents, back where that big first pump happened. So we're going to go to our industry exclusive rectangle shithouse advisory, or last line of defense to the shithouse, which is orange. So we're going to make it orange, right? And that's your get my shit together zone, or AKA last line of defense to the shithouse, right? That's why that's there, because there ain't no volume below that. And then you got a little bit of volume sneaking in. See this when we zoom on into the volume indicator? So here's how you play the volume indicator. Simple, super easy technical analysis, technical trading education for you from Vincenzo, free of charge. And you can get an inside look at what my classes are. Yes, there is a beginner trading view, how to set up a technical chart for beginners for $6.69. Email me, links are in the description. But this is an insight into what we got going on at them classes. If you zoom into the volume indicator, if you were playing this when the price on the epic morning of Saturday Night Live and the Elon Musk back then, you would have seen that this was your major support area. If you started consolidating down into the 60, 70 range right here, there's no real support in volume once you broke that until you came all the way down here to the 33-cent level. And then if you broke that, there's really no more support now until you get way down here if you ever break that. That's why I say you're going under a penny. One day you're going to break this big volume area where you've been stuck in, from about the 35-cent level down to about the 20-ish cent level. Every time you peak below the 20-cent level, get down here towards 18, you get bought back up, because that's where a lot of buyers are. That's your last area of where buyers are, right? Once you break here, there's not a lot of buyers till you get way down here to 15, and then way the fuck down there under a penny, right? So that's why once you broke this whole area is danger. There's no volume, right? That's how you play the volume indicator, and that's the super simple, powerful message this gives you. If you're up here trading and you bought the price of Bitcoin with our industry exclusive drawing tool, if you bought right here and you've seen the price break 52, you should know you're fucked, because this is all sell volume in this area. This red is sell. And the next buy zone that came up is way down here at 39 cents. So this volume indicator was telling you, you better look out, right? If you break this last somewhat buy area at 52 cents, the next area where buyers were, where there was some down here at 43 cents, which is a 17.69% crash, and then a major area down here at 36 cents, right? But that's a 29.69% collapse. And that's how you play this. The same thing is if you break this, when you broke this right here, and this is why you're struggling. After you broke this 24-cent level, the next time there were any kind of major buyers, we're down here at 15, 16 cents, and that's why you keep getting bought back up into this range, because you got major overhead sell pressure at 24. That's why every time you get to 24, 25, you sell off. And then every time you get down here sniffing 15, you get bought back up, because there's buyers right there, but there's sellers dominating the market up here. But once you break down this 15-cent level, there ain't no more buyers. So you get all the way down there and you have a massive collapse, right? So that's a super simple, technical, educational, free class that gives you an insight to the powerful insight and knowledge to technical trading that Vincenzo Industry Exclusive can only give you. And that's how I am the best technical trader, showing you the charts to give you the information to make an educated based decision. And that's what it's all about here at Vincenzo's Gold Crypto Investing. So that's a free little snippet into the methods to the madness of old Vincenzo, right? how we diagnose, sniff out, and detect, and overt and subvert the criminal gangster cartel and fleece, heist, and shice them out of all the fucking money, right? So now that we got that, what you notice now is what I like to do is pull out our Fibonacci retracement tool and go down to our bottom, our all-time bottom, right, which is down there, and then get to our all-time high, which is way up there. And then I like to mark out, you can see where the 61.8 golden pocket is. You can see we got major support on that the first time back in its history and got bought back up. Now it's underneath it, so that's not good. Now it's going to act as resistance. And then now the next level that it likes to go to is a 78.6 Fibonacci retracement, right? And that's what we got going on here. And we're going to go into here to settings, right? Super simple and easy. And we're going to go into inputs. Nope, style. Where are we at? Are we in the right one? No, we're not. We need to be here, like white. Then we need to go here into settings and go to 70.78 Fibonacci retracement. And then we want to go here. I can't make that bar bigger. Should be able to. Level line. Bigger. Whatever, we'll make them all bigger. Oh, I can make it a different color. That's what I'll do. Bam. So we'll go back into here, settings. And then we want to identify this. So we're going to identify it with a nice, beautiful yellow color. See that? That's now where the price would like to go down to next, and it did. And now you're getting rejected. So to me, the Dogecoin, based on the Fibonacci retracement's got to come back down here and test that. So we're going back to 16 cents based off the Fibonacci. See these super simple, easy tools I like to put out here? And this is how Vincenzo technically trades. And this is a free class for you all on how to set up a chart and to give you the insight on if you want to start taking these classes to learn how to technically trade and know when to strategically place in a probability-based buy and a sell based on the technicals and the chart, and read and play the chart for what the chart is, right? And we're going to lock that. So that's what you got going on in Doge. Very powerful. And then what I like to do is I come in closer into, that's the weekly time frame. Now I go to the daily time frame. And that's why we always start from a far out time frame and work our way in so we can diagnose, snip out, and detect and understand where the price was coming from so we can have a probability-based chance to forecast where the price may go in the future and increase our chances of making a profitable trade. And you can see even in the closer time frame, the big volume spike coincides with the same thing as from the start of the coin, where the big support up here is, right? So that tells me the price is coming down to this major support box, right? So I think the next move down, and you can see, I mean, this is really easy to see what's going on up here. This is what these coins like to do. This is a symmetrical triangle. See that? Or a descending triangle, not a symmetrical triangle. What am I talking about? It's a descending triangle. See that? We're going to make this dark green, and we're going to make it huge. See that? And then we're going to make this dark green. So that's all dark green now. You see that, though? This is a descending triangle. And as we give you more insight, we have a fake out here, but you have upper resistance once, twice, 3, 4, and now almost 5 in a descending fashion, right? Descending in a downward fashion. We have downward overhead resistance with multiple hits to confirm it up here with a little fake out at the beginning, right? And then we have 1, wick back up, 2, wick back up, 3, wick back up on a horizontal or at the same level going out into the future. No matter where it goes up, it comes down to the same level. Then it comes lower high, same level, lower high, and it's coming back down here for same level. That's a descending triangle. Overhead resistance is lowering. Underneath support is horizontal at the same level, right? That's a descending triangle, and that's a bearish continuation pattern. And I bet you if we take the targeted move from here to here, this gets you right down to the shit house. It doesn't have the percentage on. So here's what you would do. It's not calculated. So you'd go in an easier way. Go here to here, And this is from here to here, a 64% move. So then we would go from here to the breakout, a 64% move would get you right here almost to the top of that major volume spike where you would have major support. So the targeted move would look like this out of there if we calibrate that, right? We go from the breakout, it would go right down to here would be the targeted move, and that would be a price of, with our industry exclusive. I teach you how to do all this at the classes. If you like how I set the charts up, if this makes you have an understanding of where to go. So now you can see in this descending triangle, we got some multiple things pointing to one direction that leads me to believe in a probability-based way in an up and down fashion, as the price could go up and then go up 5%, down 3%, up 8%, down 20%, up 18%, right? But in an up and down fashion, this is where you're going to go. And if you're trying to swing trade, this would be your next major great spot to swing trade after this triangle plays out, right? And falls through. You have buy orders down here with the volume, and then you ride it back up, which is likely to happen, and you get bought back up, and then you back test this underneath overhead resistance. Now they used to be underneath support in this descending triangle. When you break through, you need to come back up, you get back test it and get rejected and maybe continue back down. That's what I'd be looking for in the Dogecoin. If you want to take my classes and get in-depth, super simple, easy, straight to the point, technical charting and setting, how to set up the technical chart, how to start understanding and using the tools that TradingView gives you, and understanding how to use them and weight them in a probability-based way and read the chart and simply just play the chart and take the guesswork and gambling out of it. Contact me down below. The links are in the description. And be on your way to probability-based trading in a super simple, easy way to trade this market using TradingView and all the tools they give you to use and utilize. I can help you do that. If you like the way this video is, comment down below and start taking the classes. Peace and love. Peace and love.